everyone who's made the time to attend, and of course, thanking very much our speaker today from Women's World Banking. I'm not going to talk for very long because obviously the reason people tune in is to hear the technical knowledge of our presenters, not to hear me rambling on. But I would like to very quickly talk about why we think this is a really important topic. And when I say we, I'm talking about AgriFin Network and the World Bank Group. Firstly, the reason we wanted this topic talked about was not because we're a development organization and we care greatly about equality of financial inclusion, even though we do. The reason we want to talk about this today is because the people on the call, the attendees, are primarily financial institutions in developing countries. And the reason I believe you're all tuning in is because this is directly relevant to your bottom line. This is an important topic, not because you want to do good, which I'm sure everyone does, but more importantly because you want to be able to reach a very large segment of clients who are currently excluded, on the whole, from financial services. There is a big pool of a market out there, and we've thought about the way of reaching that pool through different channels, through product specifications, through different outreach and marketing. What you'll learn through this talk, I believe, is that this pool of very potentially profitable customers is actually reachable, and it's reachable in a sustainable and profitable manner. I know from my own experience of 20 years ago working with Barclays on our branch redesign that we did incredible amounts of work to understand how we could actually change our distribution systems, both the nascent online ones, but primarily the physical branches, to make them more inviting to female clients. And we had an incredible amount of success. We did this by opening up conservative dark branches into much more kind of store-fronted stores. We moved them to different locations where female footfall was much greater. We thought about how women wanted to interact differently than the traditional male clients, and we actually moved the branch structures around to actually reflect that with much more open plan, much more thought to that. And we also fundamentally changed some of our products to make them much more appealing and accessible to female clients. And I know that that was a great success. And I don't think that one moment there's any reason to assume that this is not the case in other countries too. As such, the reason for the AgriFin Network being very grateful for Women's World Banking coming on to do this webinar is because we know that this is a core topic for you, and we know that this is something of true relevance. One thing I would say, I would also be very clear on this, that the opportunity is humongous, but the size of the opportunity is also reflected in the challenge that it brings and the amount of effort that it will probably take to actually do this well in terms of thinking about channels, thinking about product design, and thinking about how you actually go about communicating with clients who potentially you haven't already had a great deal of success or experience of reaching. The reason we approached Women's World Banking and asked them to talk was not because they're an NGO, but primarily because they have an incredible amount of experience of providing consulting services to commercial institutions, financial institutions in developing countries. And you'll hear more about that today. In effect, they are a global consulting firm, a kind of McKinsey of how to reach women for financial services. And I think that this will be super relevant. What we wanted them to do is showcase some of their work in this space, but primarily focus on some of the lessons they've learned in terms of what technical solutions can be provided to actually make this workable in terms of channels, products, and services. Well, I'm very happy now to pass off, but let me just leave you with one further thought. This isn't rocket science. This is much less complex than rocket science. It's much less complicated than rocket science, but it's way more profitable if we get it right. And hopefully, everyone will come away realizing the opportunities that present themselves. And as Tamara said, please do use our Q&A box at the bottom of your screens. This is a great opportunity to ask as many technical questions or as many general questions as you wish, and have someone who's an expert globally in this field address those questions. And again, the more questions you ask, the more relevant this will become to you, because the answers at the end will directly meet your needs. If we get inundated with questions that we haven't got time at the end to answer, I'll work with the AgriFin team here to see if we can move this onto our LinkedIn group space and give you the opportunity to have those questions addressed through the LinkedIn forum, LinkedIn group. But without further ado, I'm happy to hand over to Anna, who I'm sure will have you riveted through this presentation and able to answer any questions at the end of the presentation that you post on. Thank you so much indeed for attending, and look forward to the Q&A in 20 to 30 minutes. Thank you.
Thank you so much, Roy, for this fantastic introduction, and good morning and good afternoon to everybody joining us from other parts of the world, and thank you, the AgriFin team, for including this very important topic, we agree, in your annual series. By the end of this session, I would love everyone to have clarity around three things. First, that serving rural women is not a nice to have, but a must for a large-scale rural finance program. Secondly, that there are not just strong social impact, but very important business reasons for doing that. And finally, serving rural women well means that they have to be targeted specifically. And I say that because it has very important implications on product design, marketing, communication, and consumer education strategies, as well as the operating model for reaching the women. In my presentation, I will provide a brief background on women's rural banking, why we believe that serving the women's market makes social and business sense, share with you our product development approach, and present key takeaways from designing inclusive rural lending propositions, mostly drawing from our experience in Latin America. So, women's rural banking is the global non-for-profit devoted to giving more low-income women access to the financial tools and resources they need to achieve both security and prosperity. For more than 35 years, we've been studying the lives of women and working with financial institutions to develop the right financial products to meet women's needs in designing credit, savings, and insurance products. The institutions we work with range from a large commercial bank in Nigeria to the largest mobile network operator in Pakistan to a specialized finance institution in Colombia to a small finance bank in India. So it's a very wide range of institutions. They all come together and work with us to innovate around products and services for the women's market. We currently work with about 40 institutions in 29 countries, so we are truly global. So why do we focus on women? And I think this slide, Roy already presented in his introduction, kind of listing lots of those arguments. We truly believe that women represent a huge untapped market opportunity. Women are the majority of them bank, more than $1 billion out there, and we also know that women living on less than $2 a day are 28% less likely to have an account, to have access to a bank account. Secondly, there is an important social impact reason. We know that when we invest in women, we invest in their children's education, better health care for their families, and better housing. These are the type of investments that can drive long-term improvements in families and communities around the world. And finally, when you invest in women, you're investing in stronger economic growth. Research more and more shows that direct correlation. For instance, according to Goldman Sachs, if the credit gap for women-owned SMEs is closed by 2020, by 2030, incomes per capita could be on average 12% higher across the BRIC countries and next 11 countries. We also see a very important business case for serving women. Many of us from years of working in the sector know that women are more likely to repay loans and to do so faster than men. What we see from our work also that women are more loyal customers. They tend to spend with the institution for longer periods of time, and if they're happy with your service, they tend to recommend your service and your institutions to their network, to more women and acquaintances in their network. They also tend to buy more products, and we see that especially with microinsurance products, as we know women are the risk managers of their household. So let's now talk how Women's World Banking designs financial products to serve the women's market. Our product development framework is very much based on the deep understanding of client needs, preferences, and behavior, as well as the local context, competitive environment, and strategies and capacities of a partner financial institution. It focuses on 3 areas. First, product design. Are there barriers for her to access the product? Is there excessive or not available documentation? For example, property title. Secondly, marketing and financial education. Does she understand the benefits of the product? Does she trust the financial institution? Is it a bank for me? We develop marketing and financial education strategies to tackle these questions. And of course, a great focus and a lot of work, hard work, is placed on designing the right operating model to deliver the product in the most efficient and effective way possible. It includes reviewing policies, procedures, staff training, ensuring that there are delivery channels that can reach her effectively. So we're here to talk about how to reach women with financial products. So what do we know about her? We know that she's less literate, she's time poor, she has less assets than men, she engages in economic activities with often irregular income, and we also know that savings is her most frequent financial transaction. We also look closely at roles and responsibilities. Just one second. Are we switching the?
Yes, we are.
Okay. We also look closely at roles and responsibilities in households as they inform us about the specific needs and barriers of each family member when accessing financial products. So women's roles span from a contributor in household, where the male is clearly in charge and is dominant income earner and decision maker. We saw lots of women in this contributor role in our work in Paraguay, to a collaborator in more cooperative households where a couple is sharing businesses and the household functions as a single economy. We saw a lot of those women in rural Colombia. To households where women have a voice and decisions are made cooperatively, but the businesses are kept separate as his and hers. We saw lots of those profiles in Peru, for example. So how do we incorporate this client's insights into the program design? I will speak about it very concretely, drawing from our experience from the rural lending project in 3 countries in Latin America, Paraguay, Peru, and Colombia, which ran from 2012 to 2015. So just very, very brief background. We had 3 organizations participating in the program, and each of them defined what they wanted to achieve with this program. So Banca Interfisa in Paraguay had 12% women clients in their portfolio, and they wanted to increase their participation both in women's market and rural areas. Fundación de la Mujer in Colombia has had always a very strong women's focus and had about 70% of women clients in their total portfolio. But as they started expanding into rural areas, they noticed that the participation of women in that portfolio dropped to 38%. They wanted to figure out why that's happened and, of course, to correct the situation. Caja Arequipa in Peru had mostly urban presence with their loan portfolio, and it was pretty evenly distributed between men and women. They wanted to get deeper into rural areas at that point and wanted to ensure that they maintained that gender balance. So every project starts with in-depth customer research, and the key finding for all of those three markets was the invisibility of women's economic contribution to the household. And it was real at multiple levels. When we would ask her, what is your role in the household, she would describe herself as just a housewife. When we would ask her spouse, the man of the house, what is your wife's role in the household, he would describe it as she takes care of the children, she takes care of the meals, she takes care of the family. And interestingly, when we would ask our colleagues at the financial institutions with which we work, they would, what was the role of women in rural households, they would say, you know, when we visit a farm, we first shake hands with the man of the house. And because he's really kind of the main income earner, and that's the main activity of the farm. But when we started doing a more in-depth analysis, and I remember very well visiting a farm in Paraguay where kind of the main business of the farm, according to the loan officer who accompanied me, was growing pineapple, and there were 2 crops a year. So that was the main income, but then we started understanding what the wife was doing, and she was raising chickens, she was selling eggs to her neighbors, and as well as other dairy products, and she had a very small shop on the property. And what we noticed when we started doing the kind of estimating the cash flow from the pineapple business, from the pineapple crops twice a year, and from her business, we noticed that her contribution to the total revenue of the household was greater than her husband's contribution twice a year. What was also very important, that her cash flow was much more evenly distributed throughout the year. So she had a constant cash flow that helped them smoothen the cash flow during the year. She had no idea how much she was contributing. He had no idea. The loan officer who was there with me had no idea. So that has kind of this underestimation of her contribution to the household income has very serious implications for financial institutions as women are excluded as customers, and the significant portion of the family income is disregarded. We also believe there is an increased credit risk in relying on the income of one large harvest for repayment and not taking into account the steady cash flow of women's activities. So how did we respond? Again, going to the example with Banca Interfisa in Paraguay, when we started working with them, they had one rural lending product, which was 9-month loan with a bullet payment in the end. It fit a lot of crops, kind of growing activities. It had a minimum starting loan amount of $2,000, equivalent of $2,000. So none of the features fit the type of requirements for women's economic activities, which women were looking for small amounts. They were looking for loan terms that would allow them to repay on a more regular basis because their incoming cash flow was much more on a regular basis. So they were looking for monthly installments, and they were looking for shorter loan terms. So that was the first kind of redesigned feature, lowering the minimum loan amount to about $300, ensuring that we had an opportunity to have flexible loan terms starting from 6 months, and that she was able to repay, on a monthly basis. So this was some of the modifications we made to the product. Then kind of addressing her lack of awareness of services of financial institutions, and also something that we call an emotional distance that women have from kind of this formal financial institutions, thinking that, oh, these are the institutions for men, or with people with much larger income that I have. So we designed a marketing campaign with a headline, Ndevale, and Ndevale in Guarani, which is a local language in Paraguay, means you can, kind of providing that empowering kind of aspect to the message. We also ran a radio novella on a weekly basis in the morning time when she was still in the house, kind of preparing the meals for the household, and that radio novella featured success stories of women like her who were involved in economic activities at a farm while taking care of their families and other kind of chores at a farm, kind of providing examples that, well, you can succeed. You can succeed both in business and as the mother and as the woman of the family. And of course, the hardest and most intensive work was around all the aspects, all the components of the operating model redesign. Kind of started in a lot of, in all of those 3 institutions with investing in retraining the loan officers to make sure that they have the skills and conduct appropriate cash flow assessment of the entire economic unit, both of his activities and her activities. We also invested in gender sensitization programs, making sure that the field staff, loan officers, really knew how to understand the profile of a rural woman, that they knew how to talk to her, how to communicate with her, how to be able to get all the required data and then information they needed to conduct their analysis. So that was the training that was conducted not only at the level of loan officers, but also at the level of middle management to ensure that then when they evaluate they evaluate those applications, they also understand the profiles of the women's businesses, how they engage, and how the loan officers conducted this analysis. And of course, you know, we did a lot of also gender sensitization work with the organization's leadership, because they had to really provide the direction and lead the way and continuously reinforce to their institutions and staff in the institutions why it was imperative and for their organization's strategies to serve the women's market. We also did a lot of redesign around performance management systems in those organizations, because what we found in those 3 organizations, but also in a number of our other partners, that loan officer incentive systems are very often very much focused or much more heavily weighted on the amount of their portfolio. But when we are talking about serving rural women, it could be that the loans are often of smaller amounts and they're much more frequent. So including indicators, KPIs as the number of loans, putting heavier weight on repayment ratios was also very important. Otherwise, loan officers had no incentives to serve this market because it had a very negative impact on their bottom line in the end of the month if they're only compensated on the total amount of their portfolio. So these are kind of some of the operating model redesigns we had to engage in. In terms of the solutions that we would like to propose as something for you to consider as you're thinking about targeting women through your rural programs, we suggest, of course, adjusting product features, loan terms, collateral requirements, documentation to make credit accessible to her and also relevant to her economic activities. We've also introduced this possibility of making multiple loans per household as long as you have a very clear idea of the household capacity to repay. We don't see issues with providing more than one loan to a household, which is in many cases, in many of our partners, we see as being one of the policy, not more than one loan per household. And if that's the policy, it very often goes to the larger activity of the household, and it very often goes to the men, so excluding women. So consider allowing multiple loans per household. Targeting women specifically, again, marketing campaigns in her language and on her terms. Again, going back to Paraguay, when we started working with Banco Introfisa, every marketing collateral, every communication was in Spanish when 99% of the women they wanted to target didn't speak a word of Spanish and they only spoke Guarani. So that was, again, something very commonsensical but was not taken into account. Modifying existing credit methodologies to measure the entire family income and the growth potential of all income generating businesses. Very important. Don't overlook what she's doing. Understand her capacity to repay, provide the product and solution that fits what she's doing. Staff training, critical. Both in credit methodologies, but also in how you communicate and approach women clients. So again, this kind of gender sensitization trainings, as we call them, very, very important. And of course, measuring how well you serve women and make sure that it's reflected in your KPIs. Again, working with a number of institutions around the globe, we see that many of them don't disaggregate the data they receive by gender. That's very, very important because you really need to have the baseline of how well you serve the women's market. And what's also very important, reviewing your incentive system, ensuring that the way you incentivize your field staff to serve the clientele does not exclude women just by the features you're incentivizing in the compensation plan. So in summary, just kind of going back to what we achieved, just kind of one more point with all those modifications, kind of happy to report back that we had pretty strong results from the project in Latin America, reaching over 100,000 clients, 46% of women clients were new clients. So it's really kind of supporting that argument that we allow this institution tapped into the new market that we're not reaching before, and kind of the one number that I think I'm most proud of in this project is that with Banco Introfisa in Paraguay, the starting point was 12% women in their portfolio, and a short period of 3 years, we went from 12% to 33% participation of women in their portfolio. So it became from kind of a marginal, insignificant group to a very significant component of the market out there. Clearly, they've learned something of how to reach them and how to successfully serve them. We also, that low percentage in Colombia that we had about 38% women clients in rural areas, we went to about 49%, and again, in less than 3 years. So this is kind of significant numbers to show that this institution really tapped into that market opportunity out there with women's market. So what do we consider as keys to designing women's focused products? Again, segmenting by gender from the outset is very, very important. We can demonstrate to you that women have different preferences and uses for financial services. Take that into account from the outset. Offer her a product that adds value and improves on her current solution. We believe that to reach women, they have to be targeted specifically. Women consume different media, but they might not be attracted by benefits that appeal to men, and they make decisions based on their own criteria. The business case, and again, that is something that Roy mentioned in his introduction, has to be there. And sustainability and scale of programs focusing on women depend very much on the development of this robust business case. And what we encourage you to do when you develop a business case, not necessarily focus on the profitability per product, but really focus on her profitability, her total profitability as a client. Because going back to some of the kind of business case arguments that are presented in the very beginning, she's more loyal, she has a higher NPS ratio. If you offer her more products, especially if you offer her savings and insurance facilities, she'll buy more of those. So her entire profitability, if you measure it holistically to the institution, is significant, but not if you try to measure it per each product and seeing that she is the one who borrows in small amounts, and for her you have to create channels that have to provide greater convenience. So really measure her profitability as a whole, as a client to the institution, not per product that you've been serving her. So this is what I had to say initially, and very excited about the Q&A and any of the questions or clarifications you might have. Over to you, Roy.
Fantastic. Well, I would firstly like to say thank you very much for that presentation. It was incredibly insightful, and I can see from all the questions we're getting, not just on the public forum, but individually sent in to us, that people have got a lot of questions for you. So without further ado, I'm going to hit you with those questions. However, I'd like to start with my question, please, because something, and I've worked on capacity building, both working for banks and working at the World Bank with banks. And my big question is that whenever we've done change programs with commercial financial institutions, be they MFIs, be they commercial banks, we realized how difficult it is to build, the capacity to do the research, to understand the market, and then tailor the products. But we've achieved it. This seems to be on another level in terms of the bank staff, generally, when we've worked with commercial banks, will know about products, will know about cash flows, will know about processes, etc. But everything you've talked about is the need to actually understand how women function in society, how they sit within the household, what their income streams are, etc. And ultimately, bank staff, not to be facetious, but they're bankers, not sociologists. How do banks go about, or non-bank financial institutions, in conducting the underlying research required to actually inform product design, inform channel development, inform those bits and pieces? I mean, I know that's a difficult question because it's probably different in every market, but I'm assuming you haven't got in-house resources that have the capability always to do this? Or how does one go about starting the process?
Well, I would say we have similar experience to yours that in many cases, banks or kind of large commercial financial institutions don't have in-house research capabilities, and they outsource that. They usually look for, what we notice also, they usually look for kind of those large-scale studies that can help them outline a market opportunity. They rarely commission studies that help them understand profiles of clients. So this is the type of insights we bring to the table. And, there are a number of firms out there that do it very well. We work more and more right now with behavioral economics firms, really trying to understand more and more what triggers behavior by gender in different contexts, in different, in relation to different products. So, well, there are no shortcuts to that. I don't necessarily say that we encourage the institutions to develop that market research function, but we definitely, from that experience in 3 countries, we definitely spend a lot of time with the marketing teams in those 3 organizations, helping them understand at least the results of the customer research and what they have to look for in understanding the customer, right? And how to incorporate those insights in the way they communicate to clients, in the way they communicate internally, in the way they design products, et cetera. Does that make sense? So we don't encourage people to like set up market research departments. We just encourage them to really understand, and that's why we always try to get them to accompany us on those kind of market research studies, so that they please understand what we're asking and how, and why, and then we will work very closely with us on this entire product development process, demonstrating of how we can incorporate those insights into, again, product review and marketing, et cetera.
Now, we've had a couple of questions in the public forum box that are very interesting, and I'm going to paraphrase this and probably misunderstand. So anyone feel free to jump in again with a correction on this. But it seems to be almost a challenge between thinking about women in the household versus women enterprises or women-headed enterprises. And, you know, should a bank that really wants to kind of think about gender start off their process by thinking, okay, the big win for us is going after SMEs that employ women, going after SMEs that are women-led and women-driven, and thinking about this from the formal employment sector, as opposed to going down to the household level and trying to understand how do we reach individual women sitting within a whole household with men and women. I mean, that seems to me like a very good question. I mean, you always need to think, where's the first bite of the cherry? Is the first bite of the cherry that a bank wanting to make a decent return on this relatively quickly, which is a totally understandable and economically rational approach, should they start thinking about women-funded, women-led SMEs first before they start thinking about the much harder area, which is the household level?
I would say it depends, and it depends. You know, that's one of the answers everybody hates, right? But even kind of looking at the three partners we have in our project: Peru, Colombia, Paraguay. So 2 of their, and in the start of the project, there was only 1 company that was able to offer a suite of products to clients from the outset. So they had, you know, they could offer deposits, they could offer insurance, etc. The partner in Colombia could only offer credit. It was a specialized, a very large specialized microfinance institution, and the banco in Paraguay became a banco during the project. So when we started out, they couldn't really offer a suite of products. So I would say go to retail level. Go to retail level when you have a capacity to offer more than credit. Because as I said, again, also in the beginning, what we know about women, we do know that they're better savers, they're responsible for saving in the household, and this is their most frequent financial transaction, right? So we recommend if you could offer savings, that could be kind of the first product or the first offer that you present to her as you build a relationship with the organization. It would also help you kind of understand her cash flow and understand her capacity. And going back to serving her with low amounts, if you have some data on her savings behavior, you can start incorporating that into your credit scoring models and figure out ways of how to serve her in a more efficient way. That said, that's great if you have all the products, but if you don't have the channels that can provide facility to her in a convenient way, that she doesn't have to travel far, and in an efficient way for you, right? So you don't have to send loan officers or to collect small amounts on a more frequent basis on have her come to your branch, right? So in Paraguay, it was interesting when we started, and kind of the situation changed during the project. They didn't have all the channels in place, right? They didn't have mobile banking, they didn't have agents. They developed that during the course of the project. So we couldn't do lots of things in the beginning. Different situation in Peru because, of course, it's a country with a very developed agent banking correspondent network. So also a very large institution with kind of a significant branch network, but also significant agent network. So we could do much more with them in a way of going deeper into rural areas and providing convenient and efficient channels, right? That was a long monologue, but did I answer the question? That it really depends on what you're trying to do.
No, of course.
And it depends on who you are and what you can provide. But again, serving women, I think, and starting with a business case and understanding kind of your time horizon to profitability is very, very important because it's, they're not talking about a year or two in many cases, right? So understanding what you're trying to do and how long it would take and what is the kind of reward in the end is very important. And this is kind of, again, from our experience, that's already 6 to 9 months of discussions and modeling with and discussion with the leadership of the organization. If you don't have that commitment and that clarity of why you're doing that and what awaits you in the end, we don't anticipate success in the end of the tunnel, because there are lots of roadblocks.
Okay, I'm going to jump in now because we're getting a number of questions where people are asking specific questions about technicalities. And again, this is really good because I think it shows the level of interest when people start asking very, very, very pointed questions. So the first one I'm going to ask you, and you've touched upon this, but people are asking for specific details. When you designed products, especially lending products or even savings products for female clients as opposed to male clients, what were the fundamental differences in those product designs in some of the cases you're talking about? I mean, what was the specific differences? This, I think, will make it very, very understandable to the audience. That everyone understands that we now need to think about women a different way, understand their income streams, understand their cash flow, understand their position in the household. But what did that look like? What was different in that product? What tailored changes were made?
Right. So I was kind of, I think, referring to that example again in Paraguay. What we specifically did in a loan product, we lowered the minimum loan amount from $2,000 to $300. we allowed we started with a product that was a 9-month loan. There was no flexibility around it, with a bullet payment in the end. We enabled a more flexible repayment schedule, a more regular repayment schedule, and didn't prescribe anymore that it has to be a 9-month term. So given options of, and I have the project manager of this program on the call, but I'll say I don't remember whether we did 3, 6, 9, and 12 months. I don't remember, but definitely 6, 9, 12, and probably longer. So kind of just making more flexible terms around both repayment schedules and the duration of the term. We also reviewed the collateral requirements, because when we started, we had very fixed collateral requirements. Was only land titles or fixed assets such as vehicles that, of course, women did not own. So up to a certain amount of a loan, it could be kind of, we were allowing for more flexible collateral. And I think for the amounts that were around $300 was totally just kind of based on the cash flow assessment and understanding of her capacity to repay.
That was a fantastic answer, because I think it's totally, I know in my mind, made me fully understand how fundamentally different the product changes were. That's led to one subsequent question just coming through to me now, which is, obviously, you're changing the collateral requirements, you're changing the way you look at your client, you're looking at a different set of criteria to make that lending decision, and you're having to make back office system changes when you change a product this much. Could you talk to those specifics? Because it's one thing to say, okay, we're going to change a loan, we're going to have multiple payments as opposed to a bullet payment. We're going to allow tenors of 2, 3, 6, whatever months. And we're not going to take the traditional collateral we do, which opens up a whole host of other back office challenges. So in parallel, did you have to redesign the credit risk assessment process, the authorization process, the systems, or how did you overcome those challenges, or how did you address them?
Well, a lot of that. Everything you said, all of the above, plus we had to get regulatory permission in Paraguay to be able to provide those kind of more flexible repayment schedules, and that, Alejandro again is on the call, and that took us like 9 months. Changes in the system, and again, it depends where you have an external provider who makes all the changes in the system. Any modifications you make in your loan product, right, have to be reflected in the system, and that's what took the longest time in all 3 of the programs. So that requires a tremendous effort, and often technology provides the kind of the biggest roadblock because it just takes a lot of time. Because it's not something, so it's very difficult, we start usually with a pilot, but it's very difficult to start with a pilot if your system doesn't truly support that. It's also, as we started requiring a much more rigorous cash flow assessment, right, and asking for much more data points that we also wanted to reflect in the system, right, not just on the paper, designing or redesigning technology to capture all those data points as an institution also took a lot of time. So there are kind of regulatory implications, there are technology implications, there are also financial implications, right? Because making any modifications to the system requires investment in sometimes significant resource investment, et cetera. But, everything you've mentioned, we had to address. I'm not even talking about collateral, right? So, because collateral, and this is, the biggest discussion in many of the organizations we're working with right now, and that's rural women or MSMEs or women, men. If you want to make smaller loans and really target that kind of businesses which don't have necessarily traditional collateral, then it has huge implication on your provisioning, on, you know, how you're evaluated by your regulator, et cetera. Huge conversation with your credit risk team. So what I did not mention, that all of this work requires, it's really kind of a multidisciplinary approach, and we work with every team in the organization. That kind of that gender sensitization and why it's important to focus on the women's market and understanding those profiles. It's not just for the field staff. It's really as important to understand for the credit risk staff, for technology people, et cetera, yeah.
So that is a perfect segue into a question that just came up that totally stumped me, and I don't know how you're going to answer this, but it's a fantastic question. The questioner is asking us effectively, is it enough to know just the general characteristics of women customers? Or in your experience, do you need to go into much more depth to really understand the unique goals, needs, and circumstances of the actual individual female client? And that to me rings so many bells of difficulty, because every client is different, and we need to have a way, and usually we use traditional big data, credit risk assessment to understand who's likely to repay, who meets what needs, which product's best. But in this situation, because it's so specific, can you use just general ideas on women, on knowing what their needs are, or do you actually need to find some way of looking at the individual characteristics of each female client?
Again, we start with pretty in-depth customer research. Both qualitative, and the qualitative piece is extremely important, understanding those individual characteristics, and then doing some quant. But in the end, what you want to do, you want to cluster the different profiles of women in segments that you can reach in bulk, right, per se, right? So you're not targeting her every time individually. So kind of one framework that I presented, kind of really understanding her profile by her contribution to the household, right? Is she a contributor? And then if you kind of go back to that slide, you can see kind of general characteristics of a contributor, you know, of what type of activities she's involved in. She usually has less mobility. She usually has less education. So you start clustering them. And there's woman who's kind of more of a collaborator. She's involved in this and that, you know. And of course, and then there's the women who are SME owners, right? So, and then this is the type of activities women are usually involved in your particular country. So, of course, clustering them is very important, and also figuring out a way of how you can reach them through partnerships, right? So, going to different associations, really leveraging other networks and other organizations that could be reaching certain profiles of women already, right?
Perfect. I have to say, as someone who actually once did a very large client segmentation process for an African regional bank, I can only imagine what it's like having to go past the kind of just economic segmentation down to those individual characteristic segmentations. It sends chills down my back, but in a good way, because you're obviously showing it can be done. Another question we got, and this had never even crossed my mind as well, which is someone asked, how do you actually build this into a bank? Say a bank turns around and says, we really want to understand female clients and we want to tailor our products and services and offerings to them. Who becomes the champion within a bank? From your experience with these projects, is it the CEO? Is it someone in the risk department? Is it someone in, especially when we think about agricultural women, is it someone in the ag lending team if they have one? Who becomes the champion of this product and heralds it through the institution? Or does it need to be a kind of multifaceted team of champions?
So I would say the multifaceted, but the CEO is critical, because he or she has to communicate continuously of why it's important, how it fits with the strategic vision of the organization, because again, it's not something that has a kind of a short-term horizon, profitability horizon. So the kind of senior leadership in the organization has to constantly reinforce that message, and also sometimes be able to kind of work with different teams to bend some rules to allow for some experimentation, right? Because you always get the biggest pushback from the credit risk team, right? So it's really somebody from that senior level needs to make sure that there is a lot of clarity of why this direction is taken. So that role is very, very important. And then, again, we learn more and more as we go and as we do more of those projects for rural women or just for women's market in general, that kind of developing the business case that's widely shared, not only with the senior leadership team or the team that's involved in the design of a particular proposition, but also with the board is extremely important. Because that business case, again, does not have a short-term horizon. Managers change, CEOs change. Well, not in many institutions we work, you know, not often enough, but, you know, they can also, their tenure, you know, could not go through the entire lifetime of the project or product introduction. So it's very important, especially if they're really serving, talking about not just one product, but really including women as an important and strategic segment into your business. That we are talking about the longer-term horizon. So that buy-in at the governance level is also very important, because if there's pressure on the bottom line and they said, let's cut this because we have not made money yet, you know, then you've lost and all your upfront investment. And it's really a significant upfront investment in research, in redesign goes nowhere, right? So
totally. So unfortunately, we have a bundle of questions and very little time to answer. I think we're left with enough time for one question if we're going to get a proper answer. So if it's acceptable with you, I'd like to go back to one of my colleagues here from the IFC, Carmen, who asked a very good question that I'm super interested in too, and I suspect a lot of people on the call will be, which is, you've done all this work and you've shown us some of the results, which are absolutely mind-boggling in terms of the impact and the speed to actually develop these markets and take on new clients and do this in a sustainable manner. And I would never downplay that, because we all know just how difficult product design, irrespective of channels in parallel, etc., can be, and changing staff and process understandings. But for me, my big question coming from Carmen is, what do we know about, once you've done this, whether there's any research undertaken on the beneficiaries? So suddenly all these female farmers living in households but working primarily in agricultural production or in trade find themselves with improved access to financial services. What impact does it have on their productivity and on their livelihoods? Or is that currently an unknown? Because again, from the development angle or the development space, even though it may be not so relevant to a commercial banker, it's very interesting to understand, does this actual financial inclusion that you're achieving change the bottom line of the household?
This is a question I'm going to pass to my colleague Alejandra Rios, who's on the call, because she was much more engaged in the outcome study that was done by an independent consulting firm on this project. Perfect. And again, you know, the problem with those outcome studies, if they're done right after the project was launched, right, that you don't have really enough time to evaluate those outcomes. But at least, Alejandra, give us just a few highlights of what we started to see.
We have about 1 minute, so yes.
Yeah, okay, so I will be fast. Yeah, we had a consultancy firm doing the impact study on the 3 countries, no? And what it was significant to see, it is that after the 3 years of the project, most of the women, especially in Colombia and in Peru, they increased the level of assets in their enterprises. They create also employment, no? As at the beginning of the project, they were using the individuals in the households or the children as labor, and they were able to really employ more people, and as well as their level of confidence in going and asking for financial products to a financial institution was increased also a lot.
Oh, wow. That was a very, very rapid response, but also one that's raised about 1,000 additional follow-on questions in my mind. I'm obviously going to come back to you with a lot more questions on that. But for that, for the time being, I will start by saying thank you all very, very much for what I think is possibly one of the most interesting presentations we've had, because for me, I honestly truly look at the questions that came in and realize that people have a real interest in this, and not for any other reason apart from it's actually good business to do this, and it makes perfect sense both from an ethical approach and a social approach, but also from being, building your market opportunities and building your enterprises. I will approach you later to see if it's possible if we can take some of these questions that we've received and take them onto the AgriFin LinkedIn group so people can then have even more follow-up questions. I think people would love to know how they actually access your services going forward when they have these kind of questions from their boards and when they have questions from staff and customers, because I think that there's still some unknowns to that. But that's this was a taster, and who knows, if we get a significant demand, maybe we can have a follow-on more technical presentation at a later date, looking at even more technical insights into this. But for now, I'll say thank you and hand over to Tamara. Again, thank you so much. That was fascinating, and I enjoyed every moment of that. Much appreciated, and thank you everyone who attended.
Thank you, Anna and Roy. We appreciate you coming in today and helping us with this. We thank the participants for coming as well. We want to let you know that the PowerPoint presentation and all webinar materials will be available on the AgriFin facility website within 24 hours of the end of this webinar, and that information will be available to all of you. Please be sure to sign up for our Agriculture Finance group on LinkedIn. Again, it's the Agriculture Finance group where we can continue this discussion. We also encourage you to become members of the AgriFin facility. We have a lot of good opportunities for membership to include first dibs on our upcoming forum held in May of this year, very exciting topic. And finally, if you like what you heard here today, please do join us for our upcoming webinar, Using Alternative Data for Financial Decisions, Lending to Farmers Using Non-Traditional Data, and that'll be February 15th. Thank you again, everyone. We really appreciate it, and have a wonderful rest of your day.